What we've kind of done here is we've looked at the main part of a new world to a lot of people. It's to that person that gets a W-2, maybe that's the only thing they have, or they're, husband and wife with a couple of kids, but they've never filed, they've never received a 1099-K that they've had to file on. And maybe they think these personal transactions, you don't have to worry about it. What do we do if we have an error? So I'm showing you how to do your return if you don't have an advisor, but maybe tax pros are watching this, so they'll be watching it too, and I hope so. So first thing is, what happens if we receive an error? And again, as we go through this, remember, this is if you get a 1099-K in error, because we got the national threshold. But at the beginning of the session, I told you about different states that have $600 and no transaction thresholds. Here in Missouri, it's $1,200 and no threshold. So we still should be getting 1099-Ks in a lot of states unless the states change their requirements. That's why I'm concerned there's going to be a whole bunch of people this year get 1099-Ks, and they're going, why did I get this? I'm below the threshold. We don't know that answer yet. So let's look at an error. You received this transaction, and it's for some concert tickets. So it was a reimbursement, as we can see here. It was a reimbursement of a friend of $800 for a concert ticket that he bought. Well, it wasn't a purchase, it was just a reimbursement. And you'll see this a lot like on Venmo. There was a reimbursement for going to dinner together, a very common one. You buy the tickets, I'll reimburse you. In that case, if you get a 1099-K in error on this transaction, here's how you report it. You first put it on Schedule 1, and then you put on the line 1099-K received in error, $800. Then you go down to Adjustments for Income, and you report it on 1099-K received in error. At that point in time, the income and the adjustment offset each other, resulting in zero. So that's how we're going to report any errors. Remember, if you do get a 1099-K, don't throw it away. If you throw it away, you're going to get what we call a CP 2000 notice, and they're going to send you a tax bill on the full amount, on the gross of the 1099-K. So you see a 1099-K, and let's say for a moment it's totally in error. This is how you're going to report it, right here. Any transactions on that 1099-K that were transfers that should have not been reported, you're going to report it right here. So to me, this is the biggest thing about incorrect 1099s when we receive it. So keep that in mind. Let's next look at personal. I said in this video I was going to focus on the errors and the personal transactions, because over in the business world, what happens is in the business world, they're already receiving 1099-Ks already. So let's take the next one I want to look at. Here's a personal item sold at a loss. So what's going to happen? We're going to put it on Form 1040, Schedule 1. You received $600 for selling the couch, that good old couch. The couch cost $1,000. So we've got $600 we received for it, but we paid $1,000. It's a personal item. It's out of the living room. There's two ways to report this, and I'm going to show you each. First one is, and again, it's sold at a loss. We've sold it at a loss. What we're going to see here, we're going to report it just like we did the error. The first way is we're just going to go to Schedule 1, then we're going to come down here, and what we're going to do is 1099-K, personal item sold at a loss, $600. Then on the adjustments to income, we're going to go on that schedule, and we're going to go 1099-K, personal item sold at a loss, $600. The $600 offsets the $600, but remember, we paid $1,000 for it. So what I'm going to do is I'm going to do a second way of reporting it. So here's what we could do is instead of reporting it as additional income and adjustments, we can go on the 8949, and it'll end up on the Schedule D. And all this is saying is there's that couch. The proceeds were $600. The cost was $1,000. It's a loss, but it's a personal loss, so we don't get that loss, and we end up with zero. What I like about this, first thing is, it shows me my actual information. It shows me I paid $1,000 for that, but because it's personal, I don't get that. Now hang on with me for a second, because let's look at a gain, but when we get done with the gain, we're going to look at, these are personal transactions. We're going to have some at a profit, some at a loss. Again, some at a profit and some at a loss. So now let's look if we sold it at a gain. So here we're going to sell this at a gain. So we sold the couch for $1,200 instead of $600. In that case, because it's a gain, here's and I'm going to stop and give a little tax advice in general. See, if you have a gain, then we're going to say it's personal. It's a capital gain. I want to pay the less tax I can. If it's a capital gain, then it's either short-term or long-term. And the ideal thing is to have long-term capital gains. Because if I put it over like I did the loss, or I put it over like I did the error, I'm going to get the highest tax bracket on the gain. So I'm putting it here to get the lowest tax impact. So in this case, my proceeds, I got $1,200 out of it. I sold, cost was $1,000, and I made a profit. So I've reported it. So the next thing we need to look at in the personal item is we need to look at what happens if we have gains and losses in the same year. Now it could be gains and losses that some of the transactions are on a 1099-K and some of them are not on the 1099-K. As I said in the beginning of this video, you have to realize what the law says is that anytime you have a gain on a personal item, you still have to report it on the return. And so, and as I've said a couple different times in this video, that's why Congress passed the act for this new threshold. And when you look at it, what they're trying to do is go after cash transactions or the personal transfers on these platforms. They want them reported on the return. Real quick before we go to profits and losses, if you have no receipts for the personal items, then an examiner may allow you to present reconstructed records, or the examiner may accept an oral testimony. So there's no free pass. You just can't say, well, I can't find the cost. Or you can't say, well, I sold the couch for $1,200. I think I had $1,200. You can't do that. You have to go back and say, I paid $1,000 for the couch. If I sold it at $600, I have a loss. If I sell it at $1,200, I have a profit. So just a real quick stop. Here's the thing I really want to focus on, and this is the confusing part, and this one applies today. This applies anytime you're selling personal transactions, whether you're selling it for cash or somebody's writing you a check, or you're using one of these platforms that are a transfer, Venmo, Marketplace, PayPal, whatever. So what I want to do in this example, we're going to sell something at a profit and sell it at a loss and show you how to put it on a return. Because the end game of this, once they start issuing 1099-Ks at a lower threshold, or you end up getting a 1099-K because in your state you're required to have that lower threshold. And I think that's what people are getting. We don't know what the states are going to do that's already dropped their threshold to 600 and dropped their threshold to 1,000 or dropped their threshold to 1,200. I don't know whether they're going to say we want that anyway. There may not be time to change the law. I don't know. So let's look at activities when you have a gain or loss. And this slide is probably the most critical slide in reporting personal activity, personal sales on a tax return. Your gains and losses are to be reported separately. And that means both. Gains on the sale of personal assets cannot be offset by losses from the sale of personal assets. Let me repeat that. If we had two couches and one we sold for a profit and one we sold for a loss, let's say we had a couch and a love seat, one for a profit, one for a loss. We can't put them together and offset them. So what happens there is that you're going to have to report them separately. So let's take a look at reporting them separately. All right, sold 2 sets of 4 tickets, bought for personal use, 2 separate sporting events. So there are 2 separate sporting events. One set sold for $800 and the other sold for $200. Purchased each set for $250 or a total for $500. So here's where we go. Sold 1 set of tickets for $800. Well, we're going to put them on the $89.49, and there because we have a gain. So here's our $800. We sold them for. We have sold cost $250. Our gain is $550. So important thing, we're going to put it there. It's short term, so it's short-term capital gain. If it was over a year, it'd be long-term capital gain. So we sold 1 set for $800. Sold set 2 for $200, and in that case we sold it. We have 2 ways because we have a loss here. We can sell it at $200 and show items sold at a loss and offset the same thing, items sold at a loss of 200. So as you can see there, it zeroed out. But we have two transactions. So what that means is we reported one over on the 8949 for capital gain, and we reported the other one on ordinary income. Is there a way we don't have to fill out all these forms? Keep it simple. Well, yes, we can. So what we can do here is if we have gains and losses, what we can end up doing is that we can end up in each one of these cases, we can show that here was the one for a gain, and here's the one for a loss. But notice, the loss is over in the adjustment amount. So here's the loss, gets suspended, so to speak, right here. So you can show the client, here's what we had for income. Here's what we had. We had a profit on the first set of tickets. We had a loss on the next one. And so in this way, when you get done, see this area here of gross proceeds? The area of gross proceeds, that will tie back, or should tie back to your 1099K. Or if you have other transactions that's not part of a 1099K, this number should always be greater than the 1099Ks. So what we've kind of done here is we've looked at the main part of a new world to a lot of people. It's to that person that gets a W-2, maybe that's the only thing they have, or they're, husband and wife with a couple of kids, but they've never filed, they've never received a 1099K that they've had to file on. And maybe they think these personal transactions, you don't have to worry about it. And so don't shoot the messenger here. It's just the way the law is written and has been written since the beginning of the law back in the 50s. It's the fact that if you have a gain on a personal item, you're to report it. There's no de minimis threshold. If you have a loss, you don't have to report it. And if you're reporting with no 1099K, the losses are not critical. Just report the gains if you want to, because losses don't have to be reported. The reason why here we're reporting the losses is in case we get a 1099K. And there, because of that, we want to report the gains and the losses, because if B here is less than the 1099K, you're going to get a notice and the IRS is going to pay taxes on the difference.